Stop, read this, it could save you everything. I need you to listen to me. I mean, really listen. We're going to talk about something most people just push aside. They say, I'll deal with it later, or I can't afford that right now. That something is insurance. You cannot afford not to have it. Thinking you can skip insurance is one of the biggest financial mistakes you'll ever make. It's a gamble. You're betting nothing bad will happen to you, to your car, to your home, to your health. That's a bet you're destined to lose. So many people, especially when they're young, fabulous, maybe a little broke, they see insurance as just another bill. It feels like you're paying for nothing. You write that check, or you watch money leave your account every month and you feel like you get nothing tangible in return. It's not like buying a great new pair of shoes or going out for a fancy dinner, but you are buying something. You're buying security, you're buying the ability to sleep at night. You're buying a promise that if the worst happens, you won't be financially wiped out. A single accident won't destroy everything you've built. Let me be clear, insurance is not a maybe, it's a must-have. It's as essential as a roof over your head, or food on your table. One unexpected event can create a debt so large it could follow you for life. A car accident, a sudden medical diagnosis, a fire in your apartment. These things happen every single day to people just like you. The only difference between those who recover and those who are ruined is whether they had a plan. That plan is called insurance. It's your personal financial bodyguard. We're going to walk through this together. I'll hold your hand and show you why smart people never skip insurance. We'll cover the types you need, why you need them, and how to get them without breaking the bank. We're going to make this simple. We're going to make you powerful. By the time you finish, you'll know insurance isn't an expense. It's the single most important investment you can make in yourself and your future. Think of your financial life like a high-wire act. You're carefully walking along, balancing your income, your savings, and your dreams for the future. It's an exciting journey, but honestly, it's also pretty precarious. One strong gust of wind, an unexpected job loss, a medical emergency, a car crash could send you tumbling. Insurance is your safety net. It's the strong, resilient mesh spread out below you. If you fall, you won't crash to the ground. You'll land safely, dust yourself off, and be able to climb back up and continue your journey. Without that net, the fall could be financially fatal. Let's talk about your most valuable asset. It's not your car, it's not your phone, it's your body, your health. Without it, nothing else matters. You can't work, you can't earn, you can't enjoy your life. Health insurance is the non-negotiable guardian of this asset. It's the barrier that stands between you and crippling medical debt. In today's world, a simple hospital stay can cost tens of thousands of dollars. A major surgery can easily run into the hundreds of thousands. A serious diagnosis like cancer can easily run into the hundreds of thousands. No one, I repeat, no one can afford that out of pocket. Let me tell you about Maria. Maria was 28 years old. She was a vibrant graphic designer, just starting to build her freelance career. She was healthy. She exercised. She rarely got sick. Like many young and healthy people, she thought health insurance was a waste of money. She was paying about $300 a month for a plan through the healthcare marketplace. She felt that money could be better used to pay off her student loans. Against her parents' advice, she canceled her policy for a year to save cash. For 6 months, everything was fine. She saved about $1,800. She felt smart, like she'd beaten the system. Then one morning she woke up with a sharp stabbing abdominal pain. It was so intense she could barely stand. Her roommate rushed her to the emergency room. After a series of tests, including a CT scan, doctors told her she had acute appendicitis and needed emergency surgery immediately. There was no time to think or plan. She was wheeled into the operating room within the hour. The surgery was a success. She was on the road to recovery. A few weeks later, the bills began to arrive. The bill for the emergency room visit alone was over $5,000. The surgeon's fee was $8,000. And the bill for her 2-night hospital stay was $45,000. All told, Maria was looking at a grand total of over $61,000 in medical debt. The $1,800 she had saved was a cruel joke. If you own a car, you must have auto insurance. In nearly every state it is the law, but I want you to look at it as more than just a legal requirement. I want you to see it as your financial shield every time you get behind the wheel. A car is a large, heavy piece of machinery that moves at high speeds. The potential for causing damage, to other cars, to property, and most importantly to other people, is immense. Without auto insurance, you are personally responsible for every penny of that damage. A single moment of distraction could lead to a lifetime of debt. The most important part of any auto policy is liability coverage. This is the part that protects you if you cause an accident. It has two main components: bodily injury liability and property damage liability. Bodily injury liability pays for the medical bills, lost wages, and pain and suffering. Property damage liability pays to repair or replace the other person's car, or any other property you damage, like a fence, like a mailbox. A serious accident can easily result in hundreds of thousands of dollars in medical bills and property damage. Let me introduce you to David. David is a 35-year-old teacher. He is very careful with his money. He drives a reliable sedan. It's a 5-year-old sedan that he owns outright. To save a little extra each month, he decided to carry only the state minimum liability insurance. He figured he was a safe driver, he didn't need collision coverage, he didn't need comprehensive coverage. He thought, what are the chances something will happen? I'll just be careful. He was putting the money he saved, about $50 a month, into a savings account for a down payment on a house. He felt proud of his frugal strategy. One afternoon, on his way home from school, he was stopped at a red light. He glanced down for just a second to check a message on his phone. In that split second, his foot eased off the brake. His car rolled forward. It gently tapped the bumper of the brand new luxury SUV in front of him. It seemed like a minor fender bender. But when the driver got out, David's heart sank. The SUV had advanced sensors. It also had a rear bumper camera. The driver was a lawyer, and he was not happy. The repair estimate for the SUV's high-tech bumper came back at $7,000. David's state minimum property damage liability limit was only $5,000. His insurance company paid the first $5,000. David was personally on the hook for the remaining $2,000. His own car had a cracked grille. It also had a broken headlight. Both would cost about $1,200 to fix. Because he had dropped his collision coverage, he had to pay for that entire repair out of his own pocket. In total, his 1-second glance at his phone cost him $3,200. His entire house down payment fund was wiped out instantly. He learned a hard lesson that day. Minimum coverage provides minimum protection. Your home is more than just a building, it is your sanctuary. It is where you keep everything you own, from your clothes and furniture to your treasured memories. Whether you own a house or rent an apartment, you need to protect that space and everything in it. That is what home and renter's insurance is for. Many people who rent make the dangerous mistake of thinking they don't need insurance. They believe the landlord's policy covers them. That is absolutely false. The landlord's policy covers the building itself, the walls, the roof, the pipes. It does absolutely nothing to protect your personal belongings. For renters, the policy is simple and incredibly affordable, often costing as little as a few cups of coffee a month. Renter's insurance provides 3 critical types of protection. First, it covers your personal property. If there is a fire, a water leak from the apartment above, or a break-in, renter's insurance will pay to replace your stolen or damaged belongings like your laptop, television, furniture, and clothes. Second, both renters and homeowners insurance provide liability protection. This is hugely important and often overlooked. Liability coverage protects you if someone is accidentally injured in your home. If a guest slips on a wet floor, trips over a rug, or your dog bites someone, you could be sued for their medical bills and other damages. For homeowners, the policy is more comprehensive because you own the structure itself. It covers damage to your house from perils like fire, wind, and hail. A key benefit is loss of use or additional living expenses coverage. If your home becomes uninhabitable due to a covered event like a fire, this part of your policy pays for you to live somewhere else, like a hotel or rental apartment, while your home is being repaired. It ensures that a disaster doesn't also leave you homeless. It is the guardian of your home base. It is the guardian of your home base. This is the one that can be the hardest to talk about, but it is one of the most important. Life insurance is not for you. It is for the people you leave behind. It is a selfless act of financial love and responsibility. If there is anyone in your life who depends on your income, a spouse, a child, a partner, an aging parent, then you need life insurance. Period. It is a promise that if you were to die unexpectedly, the people you care about most would not suffer financially while they are grieving. It is a way to ensure their future is secure, even if you are not in it. The main purpose of life insurance is to replace your income. The policy pays out a tax-free, lump sum death benefit to your chosen beneficiaries when you pass away. This money can be used for anything, but it is typically used to cover major expenses. It can pay off the mortgage, ensuring your family can stay in their home. It can clear all other debts, car loans, credit card balances. It can fund your children's college education. It can simply cover day-to-day living expenses for a number of years, giving your family time to adjust to life without your income. There are two main types of life insurance: term and whole life. For most people, especially when you are younger, term life insurance is the way to go. It is simple, affordable, and does exactly what you need it to do. You buy a policy for a specific period of time or term, such as 20 or 30 years. If you die during that term, your beneficiaries get the death benefit. If you outlive the term, the policy expires. Because it is pure protection with no frills, it is very inexpensive. A healthy 30-year-old can often get a $500,000 policy for 20 years for less than the cost of a daily coffee. Think about the peace of mind this provides. It is knowing that, if the unthinkable happens, your family will not lose their home. Your children's dreams of college will not be shattered. Your spouse will not have to worry about paying the bills while trying to raise a family alone. Life insurance is you taking care of your family no matter what. It is the ultimate I love you. Okay, you are convinced. You understand that insurance is your financial armor. But how do you choose the right policy without getting overwhelmed or overpaying? The key is to be a smart shopper. Do not just take the first quote you get. The goal is to get the best possible coverage for the lowest possible price, and that requires a little bit of homework. The first step is to assess your needs honestly. How much liability coverage do you need on your auto policy? How much are your belongings worth for a renter's policy? How much income would your family need to replace if you were gone? Once you have an idea of what you need, it is time to compare. You should get quotes from at least 3 to 5 different insurance companies for each type of policy. You can do this by calling agents directly, or you can use online comparison websites that show you multiple quotes at once. But listen to me carefully. Do not just look at the price. A cheap policy is not a good deal if it has huge gaps in coverage. You must compare apples to apples. Look at the deductibles, which is the amount you pay out of pocket before insurance kicks in. A lower premium often means a higher deductible. Make sure you can comfortably afford that deductible. Read the fine print, look at the coverage limits. Is a $25,000 liability limit for your car really enough when a new car costs more than that? Look at the exclusions. What does the policy not cover? Also, check the reputation of the insurance company. Look for reviews on their customer service and their claims process. A great price is meaningless if the company makes it impossible to get your money when you actually need it. Look for companies with strong financial strength ratings from agencies like AM Best. It is you being smart, being responsible, and being in control of your destiny. That is true financial power.